The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. And we're looking at the markets right now as they're starting to pull on back. We got the S&P down almost a point right now. We got the Nasdaq currently up 10, but off its highs. We got the Dow is up 7, and the Russell is pretty flat on the day. It's up, looks like about 60 cents, 6 ticks right there. And then we got gold down 3.8. We got copper pretty flat on the day. Silver down over 1%. This breaking its cycle right there, moving on down. And we got corn is up a couple of bucks, and soybeans flat on the day with oil up 31 cents right now. Natural gas down 3.7%. So really just moving down, and no big surprise. Natural gas has a lot of 1 to 4% days. And then looking on over, euro dollar down 7 pips. We got pound dollar down 101. So the pound dollar just getting slammed right now. We got the Aussie dollar down 20, U.S. yen down 5, U.S. Canadian up 1, and U.S. franc up 2. And dollar index right now a little bit positive, and starting to see some other things move on down. So we'll keep watching the markets as they're moving. And it looks like we have a caller on the line right now. So let me see if I got that right there. It looks like we got Kevin. Kevin, you there?
Yes, I'm there.
Awesome.
How are you?
I am doing great. How are you doing?
Great. I really appreciate everything that TFNN does for the average investor.
Hey, we appreciate you for listening. Thank you. And I understand you entered the Silver Panther giveaway.
Yes, I did.
You won.
Wow, that's amazing.
Yeah, what a half ounce of silver.
Thank you so much. I really appreciate it.
Oh, thanks for listening, man. I appreciate
it. You guys keep up the good work.
Oh, thank you. All right, stay on the line. We'll make sure we get all your accurate information there, all right?
Okay, thanks a lot.
All right, thank you. All right, well, make sure if you haven't entered, you do hop on and take advantage of it. Just having a lot of fun right now, and a lot of people getting in on the Super Silver giveaway, and we're announcing winners constantly. So hop on Super Silver giveaway, click free to enter, fill it in right there, and maybe we'll be calling you next. And a reminder for you real quick, we do have the live Denver workshop happening this coming weekend. If you're going to be in Denver, come on out. You'll meet me, Tommy O'Brien, Dan Cook from Nadex. We'll be talking about Nadex binaries, Nadex spreads. We'll be going into, Tommy talks about timing the trade and setting up the trade and identifying the trade. We're going to come together and talk about risk and money management. One of the cool things about Nadex is your risk is managed, in the sense of you can't lose more than what you put up. At the same time, you got to have money management in that process, and you have to also have profit management. So just because you're in, you got to know when to get out. So where to take your profit. And so I'm going to go into some of the methods that I use to do that. And of course, there'll be open Q&A the entire time. And it's a free event sponsored by Nadex. We'll be giving away subscriptions. We'll be giving away books. We'll be giving away silver. And just be a lot of fun. We had a great one when we had it in Tampa. So we have another one coming up right here, like I said, in Denver. So make sure to hop on there if you're going to be able to make it and register for it and to reserve your seat. It is free, but you do have to register. And if you haven't done it yet, hop on over to TFNN.com and click on Nadex, and you can go ahead and check it out. You can create an account, and literally it's $100 to fund a live account. So see what all this stuff I've been talking about is, okay? Click start, and literally 5 minutes, start to fund it and ready to go. And while you're at it, grab a demo, okay? And they're little, there's very small differences. They're about the exact same thing, but there's very small differences. But on the demo, you can go to our product, go to demo account. You can fill that out. It takes about 15 seconds. They'll send you an email, and you can log in with that. And as you're trying to learn more about it, check out the Diagnostic Box Spread Analyzer. That comes with the live data feed from the Nadex Exchange coming directly into the TFNN members area, where you can go in and you can actually see all the spreads, what's going on with them, how they're working, and how you can best, potentially take advantage of the spread that lines up with the trade that you're looking at on your chart. So if you say, hey, I want to buy the S&P, it's going to instantly tell you, hey, out of the 26, combinations here, if you buy or sell, if you want to buy, it's going to narrow that down to just a couple choices for you, and then you click a quick button, and it'll open it right there, in Nadex for you. It makes it really easy. Comes with the deviation levels. Also comes with tutorials on binaries and spreads. And there's a help desk section. You can ask any question you got, and I'll reply back. And be glad to answer any questions that you have. And like, we always say, hey, call on in here if you have any questions. We'll be glad to answer them here live on the radio. We have our number right there on the homepage, 877-927-6648. All right, so we got that market recap there going on, and now we are checking a few more things out. Like I said, one of the big movers being the pound dollar, and we can go in, and that's always fun to look at what's moving and shaking out there and what could possibly be causing that kind of movement. But the bottom line, you don't have to read it all. You just got to follow the charts, okay? So let's go ahead and look on at it over here. We're going to look at the pound dollar, and then we're also going to look at the deviation levels with it because, it's just such a massive move. We got to check it out, right? So, are you late? Is it a good time for a reversal? We're just going to put all that together. So let me back out here. And you can see right there, so we got the Sunday session just moving on down the entire time. And let's see here. So let me log in, and I'll show you what I'm talking about when I talk about these. If you're logged on to Tiger TV right now, you can actually see it. If not, you can always go back and look at the archive. And, of course, you can listen to us anywhere in the world, just tfnn.mobi, so listen to us on your mobile phone. And right here, pulling that up. And let's see here, one more thing, and I'll bring it up for you. There we go. Okay. So now you ought to be seeing the deviation levels there right there on the chart. You just go on here as soon as you log into your members area, click here, brings up the deviations. We hop over to pound dollar, okay? And it puts it right there in black and white for you. Why are these levels so important? Why are they different than pivots? They're based on implied volatility. So how far does the market say the market is going to move? And they help a lot because they give you a target. That's one of the hard things as a trader. We would get ideally, if you're surviving very long, you get good at managing your stops as far as your stop loss. But how far do you expect it to go? Where do you tighten your stops? Things like that along the way. And so looking at the pound dollar right there, we can see a move down to 5.673, and that actually takes us just past 1.5 deviations. And we had several deviations along the way. So we had one deviation. Let's see, right here, looks like the first one was at 57.65. Well, it just flew down right here. Let's see, 57 and 65. So we hit that level right there, okay? And a little bit, that was, of course, if you're trading last night. Moved on down. Where was the expectation for it to go down from that point? So on the 57.65, looking a little bit lower there. We can see that the next move was down to 57.51, so not really that much further away, but right here, okay? And basically what we expect is we expect the market to hit these areas and then pause, okay? So you can see it hit that, went flat, came down, went flat a little bit more, and that's the 0.7, and then we go down to one deviation. Well, one deviation would bring us down to 57.30, okay? So right here is 57.30, and you can see how that sort of became, an area of oscillation before it decided to move any further on down. And then we go a little bit further down, takes us on down to 56.96. So on this last leg down right here, let's see, I want to see if that one hit it right there, 56.97. So that one did not hit it. So right there, we just hit that 1.5 deviation mark. And the next level, if we can go any further, would be 56.61. And so that's sort of the next, basically, tighten stop area that you'd be looking at on your charts. So we can see that right, be like right over here that we're looking for it. And like I said, when you're trading, it can become really difficult to figure out, what you're shooting for. And so this will let you know what you're shooting for. If you're trading Nadex, if you're trading a binary, you have to have target levels if you're going to use out of the money binaries at all. And they have really great payouts, but if you don't have a take profit in there, you're just going to be giving money away. And if you're going to set a take profit, how are you going to know? You can do support and resistance analysis. You can do Fibonacci analysis. You can go through and you could look at standard deviations. You could look at ATR. You could look at a lot of different things. You could look at pivot points. But I like to look at, either fibs. Of course, I always check out support resistance, yesterday's highs, lows, things like that. Those are just common. That support and resistance, yesterday's highs and lows. Fibs, you got to make sure you use them correctly for your entries. And And, there's a lot of great commentary on this network, so make sure you do listen to it. If you want to learn how to use Fibonacci, just listen to the shows one after another, and you're going to get some great education on Fibonacci levels. And so the next thing I like to use, I like to focus on every day, is I like to focus on the implied deviations, because it lets me have a targeted take profit whenever I have a short trade. And so that's just one example of many of how you could use that to, tighten your stops, looking for potential reversals. There's a lot of different things you could do. And pound dollar was pretty choppy, even during that entire move. I mean, that was a choppy move. So it's going to be hard to trade if you were outright trading spot FX. But if you're trading over on Nadex, you could go in, and I'll show you the spread scanner here. We go in and pull it up, and it just makes it a lot simpler. But we go over to, let's say, pound dollar, and, we have all these different spreads. So if I hit reset on it, and you'll see these are all the choices you have right now that you have to filter through to find the right pound dollar trade. And so I can go in here and go, you know what? I want to be able to at least make $1, if not more, for every dollar I risk. I don't want to, risk more than $100. And it instantly is going to, narrow down your choices. And so if you want to continue to go short on the pound dollar, then you'll see several choices right here. And you can see, the risk. Now this is equal to 10,000 units of currency. So that's about 15 grand in cash and in dollars, so 10,000 pounds. And let's see here, pull this up. And so if you want to go in there and do that, then you'd only be risking, $15 on this trade, 1 pip to break even. Not bad. This one's only $10. And this is, only a 5 pip to break even move. So just a, very, very cool trade. You're talking about that. By the way, that is your margin. So you'd be looking at, a couple $100 easy in margin if you're trying to go in and trade that. Just outright on the spot FX market. So you're putting up a couple $100. You can see, the leverage is massive. And if you're a trader, okay, then I think one of the things that you're really going to like is the spreads, because the spreads are a lot more similar to trading outright markets. It's a lot more like trading Forex and futures. And so, understanding that, you go in there and you go, okay, I want to buy the pound dollar. I want to sell the pound dollar. And really the only gap that you have to get over is, one, you're putting up less, or there's a few things. Okay, so what are the changes? If I want to buy or sell pound dollar, what are the changes on here? We'll just focus on, we'll just say sell. It's been short all day, right? So we'll just focus on that for the moment. If I want to sell pound dollar, one is I'm going to have less risk. Because, we're talking $15, $10. Now, there's a $35 risk one as well that you could take on. But risk is not your first thing you're going to look at. Just understand that you are going to, be able to put up less money, and, I guess depending upon where your stop is, less risk. So if you had a 5 pip stop loss or something, but that'd be pretty tight on the pound dollar. But so the first thing is, do I have time for it to move? Okay, and they start trading like early in the morning. They start trading at night. So there's trades constantly, and we'll go through like the main areas. There's 4, or really 5, I guess you could say, main things you want to focus on that helps you really quickly narrow down the best spread to take advantage of. And we'll just lay it out step by step for you. Stay there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And I'm your host, Darrell Martin. And let's see here. Make sure you call in with any questions you got. And what we're doing is we're going over the Nadex spreads. Okay? So again, we're going over the Nadex spreads. And I want to make sure you understand how they work, because a lot of people want to know how to trade them. And they're getting into them, and they're like, you know what? I'm sick of getting stopped out. You know, you and the guy next to you both do the exact same trade. And you get stopped out. He doesn't. So what do? You know, why does he not get stopped out? He takes on less risk. You get stopped out. He doesn't get stopped out. He's still in the trade. It comes back in his favor. He makes money. You're out. So, you know, what do you do with that? Okay? Well, you learn how to trade Nadex spreads. Because when you're trading them, every pip, if you're a forex trader, okay, every pip is worth $1. All right, so if it moves from 56.80 to 56.81, that's a $1 move. Just like if you're trading a mini lot, a pound, dollar. It's a $1 move. So very simple. Okay, pip for pip, same thing. But you have to set a stop loss. So you go in and you buy, or you let's just say you sell, and you set a stop loss, but you got to set it above a point where you think it's not going to get hit. And when you do that, you know, you're hoping it doesn't get hit. If it does move up and kicks you out, then you have to make a choice. Do I do it again? Do I not do it? how do I handle this? What is the best way for me to, react to the trade? That's what every single trader has, that psychology problem. It comes against you, and you get stopped out, which, hey, you know what? Congratulate yourself. You managed your risk. That's okay. That's a cost of business and trading. But then you got to make the decision. Do I get in again? Do I sit on my hands and watch it go in the direction I knew it was going to go in? Do I go the other direction and then get whipped out the other way? And you have to deal with all that, because no matter what decision you choose, it seems like it'll do the opposite. And so with the spreads, you don't have to have that problem. And a lot of times when people hear the word spread, they're like, okay, this sounds confusing. Is this like calls and puts and verticals and diagonals and things like that? No, this is so much simpler, okay? So literally, if you can just think of having a stop loss but you get to stay in the trade, but your risk doesn't go up, okay? So you sell. If it goes down, you make money. If you go up, you can only lose so much. And if it keeps going, you don't lose anymore. And if it comes back down before the expiration, then you're actually able to be profitable on the trade. And that's what you want to take advantage of, is when those scenarios happen. Okay? So you don't want to be where you're getting stopped out over and over and over again. And that's why I like trading on the Nadex spreads. So when I'm looking at them, I got to figure out, okay, I have capped risk. Okay, so that sounds too good to be true. What's the other side? Well, calls and puts work the same way. Okay, you have capped risk. But the difference is, these don't have, tons of premium in them. They don't have weeks and months of premium, okay? And a lot of times they don't even have days of premium, depending upon what expiration you're choosing. They may just have an hour or 2 or 3 or 4 or 8 hours of premium in them. So what that means, if you're an option guru, okay, is your delta is maximized because your gamma is like going through the roof. That's basically what happens on options expiration Friday on an in-the-money option, okay? What does that mean to a non-option trader? It means that basically you're getting a pip for pip, move is what it means. It means you're not having to deal with like deltas and gammas and thetas and vegas, oh my, all right? So implied volatility has a huge impact the further you are from expiration. Has a very little to almost nominal impact right before expiration, okay? And since expiration may be in a matter of 8 hours or 2 hours or 2 minutes, you're not worried about Vega. So you're not getting into all the options. So you can drop all the options vernacular, okay? Get rid of that, boom, out of the way. So now you do have a couple things you have to deal with, though. Okay? You do have a capped profit. But, are you going to be upset if you capture 135 or maybe 260 pips, on a day? I think any trader would be pretty happy with that. Okay? So, that could be $260. It could also be $2,600 if you're doing 10 contracts. So that's not a bad deal at all. Now, what do we got to look at? Well, how much time do we have till expiration? Because it is going to expire. So like ones we're looking at right now, this is just an example, is we have ones that expire in half an hour and ones that expire in an hour and a half. So, why would you choose the half an hour one over the hour and a half? And that has to be your first question. So you got to go over and you got to look at it and go, well, what's my distance to break even? What do I mean by distance to break even? Well, where is the pound dollar quoting at right now? And where's the spread quoting? And right now we see that ranges in between, literally trading at par, no premium, up to 3 pips. So not a bad deal. We'll keep going through it step by step. Stay right there on the break. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And looks like we got a caller on the line right now. Let's check it out. We got John from Philly. Got a question about gold. Take it away, John. What's going on?
Good afternoon to you, Dale.
Hey, good afternoon to you, man. Things going pretty good?
Very well, thanks. Say, I can see your platform in the den, and I have a question for you using that, looking for trade ideas. Let's focus on gold. What you can see, obviously, right now, gold's at $1,653. Mm-hmm. And I can tell you personally, at the moment, I don't see a trade I want to make directionally either way. But what I am interested in is this. If gold happens to trade lower over, say, the next week, 2 or 3, and gets close to that January 4th swing low, I think that was like 16.25. My question is, can you share with us what instruments, what spreads you might be looking at, just conceptually, to speculate on increased selling and much lower prices if you break under 16.25?
All right, so let me pull it up so I can get all on the same page as you here. So we got this low right over here that you're talking about. The 1634 low right here?
Yep, that's good enough.
Going earlier? Didn't know which one you're going for there.
No, that's January 4th low.
Yeah. So let's see here. Oh, yeah. Got one more level right there. Here we go. Let me pull that up, and then we'll back out even further. And come on, cooperate. All right, there we go. And then let's see here. So we're back on out. One, you want to set your next targets. So where was the volume previously? So you want to make sure you have a rollover chart, whatever platform you're using. Like if it's Ninja, it'd be like GC space pound pound dash pound pound. Thinkorswim will just build it in there for you as well. And so what you want to be, if you're thinking like after it hits that level is what you're asking me. If you think if it breaks this, like if it closes below it for the day, it's just going to fall. Is that your assumption?
Right.
On the trade?
That'd be the idea. That I'd like you to search out the right instruments to play for that. Should that evolve? Yes.
Okay. So what you would do is I'd go in if I'm looking for a longer play, which sounds like you're looking for a play over a few days, not just like a 1 day play. Is that right?
Correct. Yeah.
Okay. So you're gonna have three different ways to trade that. The simplest way would be to use the weekly binaries. So ideally this happens earlier in the week. If it happens on Friday, it's not gonna weekly daily is going to be the same thing. Okay.
Yep. Got it.
And so you can go in and you can pick a lower strike. And what they'll do is they'll list them out. Let's see. I bet the binaries are still. Let's see here. I think they may still be going for the weeklies because they actually trade. Most of them trade till 5. So let me see. I'm not sure on the gold ones. I usually don't look at them this late in the day, just because after the pit closes, I'm not even usually paying attention to gold intraday. And so there we go.
And just so as you're doing that, Darrell, the reason I'm asking for it is it's just helpful for me. It's kind of a tutorial how to use the platform, searching out instruments that that I could find for that kind of directional play.
Okay, so if you're on the Nadex platform, you're going to use you could look at binaries, okay, and then you could go to gold, and then you'd have weekly. All right. And then right there, you can go in and you can basically pick your target level. And I'd look at a deviation, maybe a multi-day deviation on it.
Right.
And so, if we were looking over at, let's say, 20, 30 points, whatever we're looking for on that market, then you can go in and let's just say we were picking this one right here. Looks like actually somebody's got a quote in for shorting gold right now. There's a few hundred contracts in there that are available. So you can sell this for $82. Okay? If gold closes below 1631.50, and this is just obviously an example, but if it closes below 1631.50, then, and let's say you sold it for, right now, the larger quote versus the individual trader, but the cumulative quote, say $82, then you'd make, let's see, $92 on the trade.
Okay.
So and you'd have an $18 risk, and you'd have all week, okay, for that to actually be profitable. So no matter how, if gold was oscillating like crazy, you'd have all week literally for it to move down and close below 1631.50. Now, one of the things I teach over and over and over again, if you're trading binaries especially, is the best strategy that I found is to close it when it gets to the strike. Because you think if we're selling it at 18, let's say we buy it back and let's just throw some bid-ask spread in there, and maybe it just gets close, like 1830, or 1632 or whatever. I like to buy my number. I always buy back at is 57. Okay, so if I'm selling at 82, I'd buy back at 57. That gives me a great risk reward. It's a very simple trade. I put it on, I put my take profit on, and I literally walk away. Okay, so I don't have to. I'm not managing it because it'll drive you nuts. You're sitting there waiting for several days for it just to get to that level, and it's going up and down, up and down, up and down. It's basically set your plan, put it in place, let it go. So that's one way to do it is on the weeklies.
Okay, very good.
So whatever your analysis is, Fibonacci's are probably one of the best ways to do weekly analysis as far as price levels, and of course you look at support resistance of historical lows and everything else as well. Now the other way is you could do daily binaries, so you could actually do the play each day, and just you're basically looking for that. Like you're expecting one of these days is going to be a massive pop, like we're going to get like a 50-point day. And we've had, some 50 and 100-point days over the last 12 months. So it's been pretty insane. But you could go in here and you could literally go into, risk like $5 a day that week on a down move that you're expecting.
Right.
And we're only, that's a pretty big move. But if it gets down there, you're making $50. So you could do that every day of the week. and your total risk on the trade over that course of that week is $25. But again, you're looking at buy back at around $50 or so, give or take a few bucks there, and like 57 if you're selling. And so that gives you about a 1-to-1 risk reward, but that's only if it hits it on the last day of the week. So this is a big advantage for you. Okay?
I see.
Because if I go and I risk $5 today, and today is the day it drops, then I make $45 on $5 risk.
Gotcha.
Every day is going to be $5 additional risk, but you're like you know up front. Because if I was going to do $50 on the weekly anyway, let's say I'm going to do like 2 of them or 3 of them.
Sure.
Well, why not just lessen that risk and do it over the course of each day, looking for that one big pop for that that day, and we do get that whenever it breaks major support or resistance levels. I mean, gold will just fly, and I've had some great gold trades. So and trading the binaries, and it's very simple, it's very easy. And one of the things I teach people is when you're looking at the bid, okay, the bid is your profit potential, because this gets people really confused. They have to open up the ticket and figure out the risk reward.
Sure.
So if it says $90.50, then $90.50 is how much money I can make on the trade, and the maximum value of a binary is $100.
Right.
Okay, so my risk is $9.50. So up here it says $55 is my profit potential, so $45 is my risk. If I flip it and look at the buy side, so the sell side shows me my profit potential, and $100 minus that is my risk. The buy side shows me my risk. So if I'm risking $14.50, then I could make $85.50. And that just makes it really simple. I mean, you can always go in and open the ticket and choose it and go back and forth, and it'll show you, it'll do the math for you. But if you're scanning a bunch of them, you don't want to be opening like 20 tickets, and that just makes it a lot faster. Now, myself, I love the spreads. Now, they're only going to be daily, so you got to keep that in mind, okay?
Right.
But that you are going to have ones that trade all night as well. Now, the closer you are to expiration, the less premium there's going to be in the trade.
Understood.
And so if you go on there, and every tick, every point on Nadex, on every spread, and we can't pull them up right now because the gold market just closed, or I'd show you some, the pit closed, is, like I said, every single pip, every single tick is $1. So if you wanted to equal a gold futures contract, you could go in and literally risk a very small amount of money. And we'll go and I'll show you, actually, this is helpful to sort of know what's available. If you go to Nadex.com, you go to range of markets, and we'll go to commodities, and then we'll click on contract specs. And then right here we got metals, and you can go down here and scroll down to the spreads on the metals. Mm-hmm. And you can see the gold will actually, the dailies will actually be 50 points wide. And they'll put one 50 points above where the market's at, like right when it opens. And it starts trading, let's see here, on the spreads, you'll have one that starts at 6 o'clock at night, okay? So
got it.
50 points above, 50 points below, and then one that's like straddling the market, okay? And if you go in and take advantage of that, now obviously a great time to go in is usually before the bell rings, in the pit there early, around 7 o'clock in the morning. So I guess 8:20 Eastern, whatever that is. But if you go in there before then, because that's when you start getting your big moves. But you can go in there and you could take that short position for a very low risk. You have $50 of profit potential in the trade, or $500 of profit potential in the trade, because every tick is worth $1. And just now, on a gold future contract, as you know, every tick is worth $10. So you could do 10 contracts and go short gold, but no matter what happens, if it goes up against you, you can't be stopped out. So basically, there's 3 different ways that you can trade it. On the binaries, I personally think going in on the dailies each day is a better strategy, simply because you're going to be able to go in and basically you'll make more money if it hits earlier in the week. Now on the here's the big thing on the spreads. You will make more money on spreads on a big move, and so that's a big advantage. I mean, because you got $500 on that trade right there, that profit potential. The other big advantage on spreads is it doesn't have to get to your price level that you're shooting for.
Right.
So let's say I have $30 of risk in the trade, and I got to sell it. I'm selling it basically $3 below where gold's at or whatever right now, and it moves on down. And I don't think it'd be that far, but let's just say you had $30 of risk in the trade. If it expires where I sold it, and gold doesn't move down like much at all, it only moves down a couple points, I get to keep all my money.
Understood.
Okay.
Understood. Right.
So that's why I like the spreads, because you're not having to deal with that whole, must move this far.
Yeah.
So,
exactly.
issue. The binaries I like more honestly for news. So, because I can go in there and, I did one on last week. I did one on the U.S. Canadian, like right before they did their interest rate announcement. I mean, the trade was on and off before I even knew it because it moved so fast. And
Sure.
so I like strangling with the binaries. I like straddling with the spreads. But if you're going to do binaries, I like I said, dailies. If you don't want to have to worry about is it getting that far. And the other thing is compare the two. Go, okay, if I sold this spread, what would I make if it hit this price? And that's one of the biggest pieces of advice I can give you if you're trying to choose between the two instruments. What would I make if the spread hit this price? And basically just, every tick's $1. So you just, do that. Basically, this price minus this price divided by 0.1 is how many ticks you got, and that's your, profit. And then the binary, okay, if I sold it for 95 and bought it back at 57, how much would I make on it if it hit this? Okay, out of the two, if I equalize my risk, so maybe you need 3 binaries to equal 1 spread, whatever. Which one would I make more if it hit this price? And a lot of times you're going to find out the spreads actually come out ahead. So now if it's a smaller, medium move, a lot of times the binaries will come out ahead. So if you're going for a big move, it's going to be the spreads usually. But you can compare the two side by side.
See how you're doing that comparison. Yeah, excellent.
Yeah, makes it a lot easier. And basically just helps you find the best trade.
Excellent. Listen, thanks so much for going through that. It was really helpful to see how you did that step by step. So that's just what I needed. Dale, I appreciate it.
Sweet, you bet. Anytime. Thanks for calling in, man. Appreciate it.
Okay, very good. Thank you.
Hey, you have a good day, John. Bye. All right, so John there from Philly calling in about gold, and it's just one of the many markets you can trade. Another one that you can trade, another metal. A lot of people don't think about this metal is copper, and copper is great to trade around new housing announcements, like new home permits, new home, like anything involving like they're about to start construction, okay, or there's in demand construction coming up, whatever, but copper is huge for that. And so those are really the days to focus on copper. And but copper is not the most liquid of future markets, and can be really dangerous to trade. So that's just sort of a tip on there. If you see those new home reports coming out, new home permits, things like that, it's a really, really good one to focus on. All right, so let's go over here and check this out, and I'll just pull the deviations up so you can be looking at those while I'm going through it. But before we go through the deviations, let's go ahead and do a recap on what has happened and what's coming up. We've been having the WEF annual meetings going on, and that's the World Economic Forum. All the big boys are supposed to be, making their comments and doing things. I haven't seen just anything massive coming out of it. But, we have seen some other things coming out. Let's see here. I want to pull this up right now because I saw the report, and I just want to see if it's would think it would. It's having an immediate impact. But, yeah, it did. Thought it might. Let's see. But, Canadian dollar. Starting to actually get a little strength off that announcement, which is pretty crazy. But Moody's downgraded a bunch of Canadian banks. But we'll go through and we'll wrap up the show here, making sure you have your plan for the week and talk about just a couple things that came out this morning. And we'll move on to the next thing. So stay right there. Right after this break, we'll wrap up with the fundamentals to watch out for this week.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and we're just doing a quick wrap-up on the news to look at for this week. So earlier this morning, we did have core durable good orders come on in, and they came in basically a little better than expectations. So, but not as good as they did for last week, and looking at last year this same time, not as good as last year. So core durable goods, even though better than expected, still trending down compared to last year and last month. So not as great as it looks. And then we also had pending home sales, and that was a pretty negative report. Came in this morning, led a lot to that, a little bit of that sell-off we got. But didn't trigger right away. So, but at 10 o'clock, we had the pending home sales come on out and started to see the market, after a little bit of a bump off the report, did pull on down, bounced on up, and started to retrace back. But it came in at negative 4.3 on a 0.5% expectation. And so that's a pretty negative report. That's actually the worst report we've had since May of last year. And obviously worse than it was before, worse than it was expected to be. And however, let's see, if we look at last year, it was worse than last year. So it literally missed on every single impact, whereas the core durable goods at 830 at least beat expectations, but was worse than the last report and worse than last year. Going on and looking forward, as far as tonight, nothing major happening. We do have some medium impact reports. And then early in the morning, not a whole lot going on either. We do have the CB Consumer Confidence Report coming out. That's a pretty high-impact report. They expect it to come in at 64.8. And it's basically 5,000 households and asking them how they feel about the future of the economy and, job opportunities, business conditions, everything overall. And so that usually is a pretty impactful report. Be aware that that's coming out at 10 o'clock in the morning. And if we go on forward, we'll look over at the 30th here on Wednesday. And it's going to be a pretty big day Wednesday. We got the ADP non-farm payroll. We got the advanced GDP coming out 15 minutes after that at 8:30. We got the FOMC statement coming out at 2:15. And so, they'll have the federal funds rate, their statement, all that stuff. We also have crude oil coming in at 10:30. So a lot of things happening on Wednesday that you can take advantage of. And then rolling on over to Thursday, we have unemployment claims and GDP. So GDP for Canada, unemployment claims here in the U.S. This Thursday is going to be one of those high-impact U.S.-Canadian days. I'm talking about those. And basically it's when you get a whole lot of things happening at once. We got 1, 2, 3, 4, 5, 6, 7, 8 reports happening at the exact same time on the dollar and the Canadian combined. So that's a time to strangle, okay? Or straddle the U.S. Canadian with binaries, or do a straddle with the spreads. It could be just Canada's having all sorts of issues coming out, and this should make for just a great trade this coming Thursday. A simple strangle about 10 minutes or so before the news comes out, maybe even 15 minutes before, and just get on there and target deviation levels. And so you go in here and pick your strikes, put in, and then of course if you do spreads, just you go and you put your take profit order in, and right here you're looking at the deviation levels and just looking for a good risk reward scenario, taking into account the risk on both sides of the trade. And so if you're risking 20 on one side and 20 on the other, getting out at 50 isn't going to do you a whole lot of good, because you're going to make $10 net after you lose $20 on the other side. So you want to make sure you take the whole risk reward scenario into account. And then let's see, we'll have Australia Thursday night. We've got PPI coming out. So that should make for some volatile, movements on the Aussie. And China will be releasing their manufacturing PMI. We'll wrap up Friday with Britain having their PMI, and the U.S., of course, releasing their unemployment rate and non-farm payroll and the ISM. So it's going to be picking up. So get ready. I'll see you tomorrow. Stay tuned. We got another great show coming in for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.